India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Today is the day. Today is D-Day in that sense, because later tonight, we will finally start to see voting data, actual data in terms of who's ahead, who's behind out of US elections coming through. By tomorrow morning, this time when we hit air, I think hopefully we'll have a clear idea who the next US president is going to be. So it's a big one that we've been sort of flagging for the last couple of months, but we are finally here. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning folks. Morning Prashant, morning Nigel. Even I thought, should we call it D-Day or call it like E-Day? Anyway, that's on a side note. But yeah, I think there's going to be plenty of action. This is the first major event, and then we have a couple of others in this week as well.
Well, that's right. It's all on the US, the elections, and then in fact we'll hear from the central bank as well. And our markets have been a little bit nervous. Let's see whether or not, the bulls want to go into the event strong, because otherwise, yesterday from the word go, we did see a lot of selling.
I think Nigel will probably be in a holding pattern today as well.
Which is not too bad.
Which is not too bad, absolutely. Hopefully we don't get another, I don't think we'll get another big
wave,
sell-off like what we saw yesterday. Yesterday was a little unanticipated. I thought we'd be probably in a range, but maybe we see that range today. So I think it's not just India, right? I mean, look at most global markets, a bit of a holding pattern. I think that's the best way to describe it till you get the big result. And guess what? You had, over the last few months, you've had polls, you've had betting markets, you've got early voting data, and so on and so forth. But are we any wiser? Nothing, zero, zilch. I mean, you're basically still down to a toss of a coin. It's that simple, 50-50 as you go into this election. So this is a pretty binary, one of the most binary kind of election results that we will get. It could swing either way with very little margin, very little separating the winner and the loser in terms of the actual vote count. So, as the world awaits the US election, we are, of course, I think, as I said, perhaps going to be in a bit of a wait and watch mode. By tomorrow morning, results should be out. By the time we are here talking to you and sort of getting you the next bazaar, I think we'll have the results come through. Now, last night, again in the US as well, not very much, slightly lower, about 0.25% down on the S&P, NASDAQ down about 0.33%. And by the way, volumes were a little lower, 15-20% lower on the on NYSE as compared to the yearly average. You look at the 10-year, which went up 10 basis points after, that is on Friday, after the jobs report. It almost gave up all of it, down about 9 basis points, about 4.29. Actually, what seems to be happening, and we flagged this off earlier as well, the market was priming for a Trump win. But I think as we've gotten closer and closer to the US election, you look at betting markets, for example, which were putting Trump ahead. Those have, in a way, all converged towards what the polling data is actually telling, the opinion polls, etc., are telling you. And they're not telling you much. It's actually down to the wire. So I think some of those trades have pulled back. Yields, for example, the dollar underperformed last night. Nothing big, but pulled back a little bit as well. Now, oil prices about 3% higher, but we already knew this during Asian trade. OPEC Plus has pushed back the December production increase by a month. There is, of course, also some commentary out of the Middle East in terms of geopolitical tensions, etc. So that is keeping oil prices slightly higher. Just to circle back the levels here, the Nifty, it tested the 5th August low, which is 23,893, and then rebounded from those levels. Yesterday, we closed above that. So that becomes important, 23,893, but that we're already practically there. We left off at almost 24,000, and this level is 23,900, so just about 100 points. I think that and then 23,700, it's a kind of equality level, which will be important. But the really big support, with some distance between where we are now and where we could head, is 23,620. What is that? That's the 40-week exponential moving average. So it's a slightly longer-term average. And it also, by the way, is the weekly lower Bollinger Band. That is 23620. Hopefully, we don't head to that. Resistance comes in at 24,230, which is the 40 hourly exponential. So it's a very near-term kind of marker above which I think some hope, people get a bit more hopeful, but you've got to cross some of these levels. For the Nifty Bank, it broke below its previous low, 51,318 yesterday. The trend line support for the Nifty Bank stands at 50,466. You basically, I mean, there are two big candles which we saw. You join the sort of lower end of that, you get to that number, 50,466. And that, by the way, is also the closest, a few percentage points away from where we left yesterday. The resistance comes in at the 20-day moving average, which is 51,508. Again, I mean, it's less than 1% away from where we stand. So this is the overall picture. If you're trading, you must trade. I think these are some of the markers to keep in mind. But I would say, as I said yesterday morning as well, stay out of the way with the big event, which is right in front of us. GIFT Nifty will give you an indication of how we are likely to start trading. It's down about 8 points or so. Surabhi.
Absolutely. I mean, it's going to be a tense, I think, next 12 to 24 hours. Still, the event is done and the outcome is before us, right? But yeah, a little piece of trivia, because typically the US market has always rallied post the election going into the end of the year. That's typically what's happened over the last two and a half decades. So if history is to repeat or rhyme, then maybe at least for the US market, things could be higher irrespective of the outcome. This morning, if you look at a lot of the Asian markets, there's positivity across our neighborhood, particularly the Chinese markets, the mainland market and the Hong Kong market. There's a lot of green on the screen over there. People have already started second-guessing what will be the outcome of the China parliamentary meeting, which is underway. Friday, we'll have the outcome. And there's been some chatter about how they're already talking about increasing the local government, the regional government debt limits, the debt ceilings. They'll be higher. So basically, they can go ahead and expand their balance sheet, the local governments, that is. So that continues to power some of the Chinese equities. There's one central bank decision in Asia today itself, which is the Reserve Bank of Australia. No rate change is expected. The other major one, obviously, is going to be later this week, which is the US Federal Reserve. And if you go by the CME Fed Watch tool, 99% probability of a 25 basis points rate cut. So that's how we are looking, as of now. The problem with our market yesterday was that we were a bit isolated in the fall. I mean, the rest of the world was quite okay. Many Asian markets closed positive. Europe was positive. So in that sense, it was a bit of an India-specific situation that was playing out. And we did break below the October consolidation zone for sure. The Nifty was trying that big recovery towards the end, but it is what it is. We're trading below the October low. So let's see if we can recover again. The critical question is that a lot of chartists have been calling for it, that there will be some sort of a test of maybe the 200-day moving average now, which is, still a lot lower. The zone would be around 23,350 to 23,450 thereabouts. So will that come into play over the next couple of sessions? That's something that the bulls will really keep a very, very close watch on. Fund flows, well, I don't have too much of good news to report. It's the same situation. More selling from foreign institutional investors. About 4,300 crores of selling came through yesterday. Domestic institutions are buying. But as you're seeing on several days now, not every day is domestic buying being able to entirely offset the FPI selling, which explains what's been going on in the market and the lower levels that we're tracking. Just a couple of numbers, and we'll tell you more in our top 10 segment. And we don't have too many, we don't have big outliers. ABB, a stock that's rallied so much on the whole capex move, the industrials move. There's a miss on ABB. Revenue is up 5%, which is below estimates. There's pressure on the margins as well. Look at Bata. Again, numbers slightly weak. There's margin pressure on Bata. Top line growth is very sluggish. 2-3% growth is what you've got year on year. KEC is in line. We'll be speaking to the management as we go forward. By the way, watch out for BSE as well, because the NSE declared its numbers yesterday. And forget the P&L. The number that Vamakshi kind of singled out for us, which is a very interesting one, because if you look at the options segment, equity options, then the market share is actually dipping. And NSE's market share has moved down from 90.9 to 88.89 or 88.9 to be sort of precise. So is NSE's loss, BSE's gain? Will we see more of that trade play out? We'll find out. But some interesting stocks on the radar. But I think the larger question is, can the market halt the kind of slide that we were in yesterday?
Well, that's right. The bulls will like to go into the event, that's the US elections as well as the Fed. They like to defend yesterday's lows. So, they'll be looking to defend the recent lows that we have seen on the index itself. Today, we'll have the weekly expiry of the Nifty Financial Services Index as well. That's one of the last few expiries before we get back to the monthly expiry. So, that'll be another index that we'll be looking at. The VIX yesterday, it popped up all the way to around 17.6. By the end of the day, it closed closer to around 16.6. So you'll not want the VIX to go back to yesterday's high. You'll hope that in the near term, maybe it's made some sort of a high at around that 17.6 to around 18 odd. What about the FIs? Well, in yesterday's fall, actually, the FIs have gone ahead and increase their long positions, the clients, that is, beg your pardon. So you had the clients that had around 2 lakh long contracts. That's gone up to around 2.3 lakh contracts. What about the FIs? They were net short. Yesterday, they added close to 10,000 contracts on the short side as well. So both of them going in opposite direction. We'll have to see who gets it right. But more often than not, we have seen that recent evidence tells us that the clients have got it right. And yesterday, they added some long positions. Moving to the options data then, you had the PCR that's come down to around 0.85 odd. And you had a fair bit of writing in yesterday's trading session. The 24,000 call was very, very active, added more than 30 lakh shares. And there appears that could possibly be a strategy that plays out here, which is a short straddle. You write both the call as well as the put of the same strike. You pocket close to around 400 rupees. And you hope that the Nifty will move close to 2% in either which direction. And that's where, in fact, you'll see some of these contracts expire. These contracts, by the way, expire on Thursday. So keep an eye on that. So that's the range, right? On the downside, you're looking at the 23,550 mark. On the upside, around 24,450 mark. Yesterday's low is important. You don't want to breach that mark. The bulls will look to defend that mark. And the 200 EMA, which I was speaking about, comes in at around the 23,500 mark. That's the line in the sand. You don't want to see that mark getting taken out. Yes, you had a 200-point bump up on the Nifty Bank, and now it has the crucial resistance mark. So around 300 points higher, it's a 20 DMA, then you have the 50 as well as the 100. So that becomes, the crucial resistance zones for the Nifty Bank itself. 51,500 is an important mark. In trade, though trade was weak yesterday, you had SBI and PNB. They did quite well, particularly in the last 60 to around 90 minutes. So the PSU banking index will be something that I'll be keeping an eye on, particularly SBI ahead of its numbers. So keep an eye on that one. And we just got some data coming out of China. And that's what could excite some of those metal, steel related as well as iron ore related names, because the Chinese data that came out, out there, you have the Chinese National Steel PMI that rose by close to 5.6 points. So keep an eye on the metal index as well.
Okay, all right, got that, Nigel. So we'll keep a lot of those cues in mind and, of course, the levels as well. Let's start off then with the equity call of the morning. Jonathan Garner of Morgan Stanley continues to think defense is safer than offense in the current highly complex environment. He says U.S. policy scenarios for 2025 present downside risks. On balance for Asia and EM, he says China policy easing is important, but valuations have already re-rated substantially, and India remains their largest overweight.
All right, well, that's basically the view coming in from sort of closely watched global equity strategist. Matt Orton is now with us, U.S. market strategist, chief market strategist at Raymond James Investment. Matt, good morning. Great to have you with us here as always. Prashant this side. So, I mean, the moment of truth is 24 hours away. And I think, nobody's any wiser in that sense. It's like a dead heat. What is your own sense, Matt? Because is it going to be what's the most consequential outcome going to be for emerging markets in your opinion?
Good morning, Prashant. Always good to see you, and certainly a busy week. I think what I've been encouraging our clients to think about is look towards almost bipartisan ways to play this election, because you can make a case for or against emerging markets in the short term, really regardless of who wins this election. If Trump ends up being the winner of the election, I think very short term, there could be some pressure on emerging markets just because U.S. rates are likely to go higher, currencies likely to appreciate, thus putting some pressure, China pressure as well due to tariffs. But when you think about it longer term, it would actually, I think, benefit a number of U.S.-friendly Asian nations like India, Taiwan, Vietnam, who are alternatives to China. Similarly, under a Harris victory, the friendshoring theme, I think, takes front and center stage, where India, again, is a significant beneficiary under that sort of administration. So either way you cut it, I think there's certain pockets of the emerging market complex that will continue to look attractive. And so, again, I've been telling clients, you don't need to be chasing this market. The pullback we've had in India, I think, is a great chance to reset, reload some positioning. And regardless of how this election shapes out, I think there's a number of EMs, India included, that look very attractive regardless of the victor.
Okay, that's good to hear. Matt, considering we've just been in a sea of selling over the last couple of weeks, yesterday included. So tell us, since you're saying it's a good time to reset and reload on India, what parts of the market do you like here?
I think the whole Indian market has really been taken to the woodshed. I mean, for India, I guess is a relative term. It's been such a beacon of strength over the past 2 years. Seeing a little bit of downside to the tune of 7-8% really isn't that bad in the longer term picture. It's helping reset some froth, reset some valuations. And I actually think Indian equities are starting to look fairly oversold right now. So when you look across the market, I'm focusing on higher quality companies at this point, those whose earnings results have been strong or at least signaling strength going forward, those who are leaning into what I believe is going to be strong continued GDP growth for the country of India. So I think financials hit that mark. ICICI Bank has been one of my favorites. I think it continues to look very attractive, and it's actually held up reasonably well as the rest of the financial complex. Similarly, the IT services space, which is one that I've tended to tactically play over the past year or so, you've had decent results. And when you look at companies even like Infosys, I think there's good resiliency that's starting to be shown. And so when you have meaningful sell-offs, that presents a good opportunity to reload, even on the consumer side, like Hindustan Unilever. There's been a significant sell-off there, and that name's starting to look a lot more attractive to me from a valuation standpoint. So it's all about quality and finding quality names that have sold off that I want to own for the long term.
All right. Hi, Matt. Morning. Good to see you, Ben. What about the call in Mahindra & Mahindra? That's working pretty well. Yesterday we had the auto index that was nervous, but that one did well. Your view on the auto sector?
It has. I still like the auto sector, Nigel. I think M&M is still one of the premier assets in the overall auto space. So I kind of look at the sell-off as an opportunity just to reassess. My fundamental thesis still plays out with respect to the growth they're seeing in new car issues that they've had. Really, really good results that we've seen. The farm implement part of their business continues to take off. So I think there's a lot of fundamental strength there. So again, weakness in a high quality asset that continues to look attractive. And really the auto space over the past month or so has sold off pretty hard. So again, where you can find higher quality investments in that space, now is the time to be looking to add positioning because you're doing so at very, very favorable levels. So as an active investor, I think the sell-off is actually really interesting and a great time for longer-term investors to start to be active.
All right, Matt, thank you very much for that. Great speaking with you as always, and I hope to speak with you again soon. So, I mean, an optimistic view coming in from Matt at Raymond James as far as India is concerned, saying that, well, the market here looks oversold after what we've seen from the highs, almost about 8.5% for the Nifty. Now, just to spend 2 minutes more on the US election bid. So over the weekend, you had Kamala Harris, who grabbed an unexpected lead in an Iowa poll. And this was a shocker because Trump had won the last one in Iowa. Trump had won Iowa by some 7 or 8 percentage points in the last election. Iowa, of course, is one of the swing states, the 7 swing states, which have about 93 electoral votes between them. And that is the reason why this is kind of given a reason for cheer as far as Democratic voters are concerned. And of course, Republicans are on a bit of a back foot after this poll. This was conducted by Selzer and Company. It gives Harris a 3 percentage point lead over Trump. My colleague Parikshit spoke with American public opinion pollster J. Ann Selzer, president of the company which conducted this particular poll. Let's actually listen in.
Well, you're expressing greater confidence than I feel. This, of course, was a shock to see Kamala Harris leading Donald Trump. Donald Trump won Iowa the last 2 elections. So shock doesn't even quite do it justice, and confidence would be overstating the case. And as far as my reputation, let's hope it's intact after Election Day. I take the best shot I can with my polling methods to reveal the truth. There's nothing more I can think of that I could do that would be helpful in understanding this.
Right. Could you explain us the methodology and what really caused this tectonic shift, so to say? Who are the large voting groups who are now backing Kamala Harris, according to you?
Independent women have shifted. In earlier polls this year, they were voting in majorities for Donald Trump, and now they're in majorities for Kamala Harris. So one of the things driving this, we speculate, is that the abortion ban went into effect in July. So our June poll that had Donald Trump with a big lead shrank and then shrank again, actually with Kamala Harris leapfrogging over him into first place. One of the things that we know, two things. We know that a majority of Iowans think that all or most abortions should be legal. We know that the congressional race, we have 4 congressional districts, all of them held by Republicans. In the first district, which has been an intense race about abortion, the Democratic challenger is leading by 20 points. So it suggests to us that abortion is a big issue here.
But do you feel that the women voters in America will be deciding this election?
There's a case certainly in Iowa for that. Kamala Harris is winning by 20 points among women. Donald Trump is winning by 14 points among men. And other pollsters who work with candidates and with campaigns have said, you know, if you're a Democratic candidate, you need to win with women more than you lose with men. And that's exactly the state of the game right here in Iowa.
Okay, so that's the Iowa shocker, as she calls it. We'll, of course, keep getting you more updates. That was Parikshit, an exclusive conversation looking at the outcome of that one important poll. Let's get back to the corporate action. And here's the lineup that you'll find on the show today. At 8:35, we will be chatting with Amit Dhanukar of Tilaknagar Industries, who'll talk about the company's Q2 performance. At 9 a.m., we will have with us, Amit Dhanukar comes up at 9 a.m. and at 9:20, Gokul Laroya of Morgan Stanley comes in and he'll be our market master of the day, get perspective from Morgan Stanley. At 9:30, management of APL Apollo Tubes will be joining in with the second quarter performance and outlook for the second half of the year. Then Amit Agarwal of DCM Shriram will be chatting with us at 9:40, talk about earnings over there. And at around 9:50, we'll have the management of Sagility India. The IPO is opening out today. We'll find out a little more about this company, which caters to the US healthcare space. And by the end of the show, in our special segment, It's the Economy, Lata will be in conversation with Kumar Rajgopalan of Retailers Association of India and A.K. Tyagi of Haldiram to discuss consumer trends.
Well, time to slip into a short break. But on the other side, we'll go full tilt on all the top stocks that we're tracking for the time being. We run you through the list, looking at Eicher, Maruti, RVNL, ABB India, Amara Raja, Battery. All of them will be in focus in trade today. And also we look at Sundaram Finance, KEC, Gland Pharma, Bata India and Bharat Forge. More details on the other side.
Welcome back. So we are counting down to E-Day, as we are calling it over here, with the US election really taking center stage. But then, as always, there are lots of individual stocks on our radar as well, some earnings to go over. And we have our team joining in with the CNBC-TV18 list of top stocks to watch. We'll start off with Sudarshan, who's looking at a bunch of EV launches that are coming in. I think Eicher as well as Maruti is coming out with some new models. Sudarshan, morning. Tell us more.
Morning, Surabhi. So there were 2 EV launches. One is from Maruti and another is from Eicher Motors. So first talk about Maruti. Suzuki Motor has launched first electric car and they have named it e-Vitara. And production will be done at Suzuki Motor plant in Gujarat, and company is expected to begin sales in 2025. And China's BYD will be supplying batteries for e-Vitara, and as of now, there are 2 options will be offered. First, one will be in 49 kilowatt and second will be in 61 kilowatt. And competition that it might face from is Tata Curve and the upcoming Hyundai Creta EV, and next is Mahindra, that is BE6E. For Eicher Motors, Royal Enfield has entered EV space finally, and they are launching new EV brand by naming Flying Flea, and it would be all new electric mobility solution for city plus space. And for now there are 2 variants. One is Flying Flea C6 and second is Flying Flea S6, and launch first model that company is planning to bring in the market is in 2025 or early 2026. And competition it might face from. So as of now, Indian two-wheeler EV market is majorly led by scooter segment, and they have limited offerings in bike as of now. So Ola's first EV bike is going to be launched in FY26, and also Hero is planning to bring portfolio of electric motorcycles. In the first portfolio, they might bring in 6 motorcycles. So these are the competition that Eicher Motors might face in the next 1 or 2 years.
Interesting. Flying Flea. That's an interesting name as well.
Looks quite good as well.
Well, thanks, Sudarshan, for that. So Flying Flea. Wonder if we're going to test that out.
I would love to. It looked quite good, quite impressive actually. But let's talk about ABB India. Vamakshi is here to dissect those numbers for us. Morning, Vama.
Well, good morning, Nigel. ABB reported a weak set of numbers. When you look at the order inflow, it came in at 3,342 crores. This is slightly below with what the analysts were working with, and slightly below the 3,500 crore order inflow run rate that we've seen over the last 2 quarters. But the order book, that was at a record high, and that is because the order book has tilted towards long cycle orders, and this in turn has impacted their revenue recognition as well. That is because the higher share of long cycle orders means that there is a lag between order booking as well as revenue recognition. So therefore, revenue has grown at a slower pace of 5%. It has missed estimates by 11%. The robotics and discrete automation as well as process automation revenue has seen a decline of 6% and 12% respectively. But the EBITDA margins, on the other hand, have seen an expansion of nearly 272 basis points to 18.55%. And this improvement is largely being driven by the improvement that we saw in the gross margins. Gross margins expanded by 670 odd basis points, and that is because the raw material cost came down by almost 6%. The EBITDA, on the other hand, given the slow growth in revenue, saw an uptick of 23%, but missed estimates by almost 8%. Net profit too came in at 440 crores. This is nearly 8% lower as compared to the street expectations. So overall, doesn't seem like a good set of numbers, but the EBITDA margin has expanded. That's the only positive this time around. The con call for the company is scheduled at 10 a.m. today, so we will be watching for the commentary that comes through from the management.
All right, Vamakshi, thank you very much for that. Now, battery makers also reported numbers. There was Amar Raja, there was XI. Sudarshan is here with details on both. Sudarshan, morning.
Morning, Prashant. So Excited reported earnings during market hours, so I'll talk about Amara Raja. It was a soft quarter. EBITDA has missed estimate by 5%. Gross margin has expanded sequentially, and it was based on favorable product mix. But on YOY basis, even gross margin was down more than 100 bips. For Q2, revenue is increased 12%, EBITDA was up 8%, and margin has slipped 50 bips. Company says it has infused 55 crore into Amara Raja Circular Solutions, and total investment in Amara Raja Circular Solutions now stands at 500 crores. So I'm going with red for Amara Raja.
Okay, got it. Thanks, Sudarshan. We'll keep it on our radar as well. Some more numbers now. Abhishek is looking at the performance for Sundaram Finance. Abhishek, how is it?
Well, it's the weakest amongst peers with respect to the disbursals momentum that you are seeing for Sundaram Finance. Disbursals have declined both YOY and quarter-on-quarter, YOY by 1.2% and sequentially by 0.7%. However, the AUM growth has remained healthy at almost 20% YOY and about 5.2% sequentially, which suggests that the tenure of the loans have actually increased in this quarter versus last quarter. Asset quality has deteriorated. Gross NP ratio has inched up by 18 basis point to 2.39 versus 2.21% in the previous quarter. With reference to the PNL, the NII growth is strong at 6.5% quarter-on-quarter, which suggests that my calculation shows that there might be a 4 to 5 basis point expansion on net interest margin. However, provisions have increased by 52.5% on a YOY basis and about 6.5% sequentially, which has put the pressure on profitability. Profits are down almost 7% YOY and they are up 10% sequentially. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vivek. He's here to tell us about KEC. Morning, Vivek.
Well, good morning. Slightly mixed quarter from KEC. Execution remains strong. Ordering activity, order book, ordering trends in the commentary, they remain strong. What remained quite muted was the EBITDA margins, and it was a miss against the management's own guidance as far as FY25 was concerned. Looking at the numbers themselves, revenues higher by 13.5%, coming in at close to 5,113 crore. EBITDA higher by almost 16.5%. EBITDA margin at 6.3% versus 6.1%. It's up both on a year-on-year basis as well as on a sequential basis, but still below what the management had guided for, close to 7.5%. That'll be something that we will get clarity on from the management when they join us a little later. Net profit higher by almost 53%. When you talk about the order book trends, the YTD order book very strong, 34,088 crore. Additionally, the company is L1 in orders of over 8,500 crores, and the YTD order intake is up 50% on a year-on-year basis, and the company has reached more than the midpoint of its guidance of 25,000 crore of order inflow that it had given for FY25. Pipeline remains very strong as per the management, 1.5 lakh crore, and the net debt too has come down quite significantly on a year-on-year basis. It will be something, again, to ask the management on, given the fact that they had seen a ratings downgrade a couple of months ago. So overall, a mixed quarter. Margin missed the only bip as far as KEC is concerned.
All right, Vivek, thank you very much for that. Gland Pharma is the next one we want to focus on. Vinny is here with details. Vinny, morning.
Good morning. So Gland Pharma reported their Q2 FY25 results. Not an exciting number coming in from the company. The key highlights, the core market, yes, that growth for the company over there was impacted because the US sales didn't do well. Weaker than expected pickup in terms of sales in US as well as the rest of the world. That was also a miss versus what the analysts were expecting. And the company has lowered their FY25 guidance. They said that they would achieve a low double-digit growth. Previously, they'd spoken about mid-teens. So keeping an eye out on the guidance also and how they're going to be performing going forward. Financials, when you look at that, revenues just saw a growth of around 2.4%. Profits of the company saw a decline of 15.7%, while margins also have seen a contraction coming in at just 21.2%. Analysts, after this, have lowered their guidance. Goldman Sachs has lowered its FY25 to FY27 EPS estimates by around 4%. Investec has cut the target price for the company to 2,055 rupees from previous 2,500. So we're expecting Gland Pharma to open up in the red, not an exciting set of numbers today.
Okay, all right, got it. Thanks very much, Vinny, for that. So lots of numbers on the radar. And here's one more. Bata India. Mangalam looked a little sluggish.
It is a little sluggish, and we've seen that trend with a lot of the consumer companies as well. It's difficult to, push out products, and that's exactly what took place there as well. Continuing market headwinds and subdued consumption is what the management attributed this quarter's performance to. But in that, the only thing which is standing out is the premium products. For all the FMCG companies, premium products are doing well. Bata is no different from a consumer discretionary standpoint as well. They showed robust growth and increased their contribution to the overall revenue mix. But that accounted for as well. The overall revenues grew just 2.2%, and that led to a decline in EBITDA because the EBITDA were down by almost 3.7%. which meant the margins compressed from about 22.1% to about 20.1%. And at the same time, the net profit had seen a decline on an adjusted basis. Of course, on a reported basis, it's a jump of 53%, largely led by a 40 crore exceptional expense in the base quarter. I see the stock opening in the red, but with the festive season and the second half being stronger, do we see some buying on dips is something that we'll have to track for Bata this time.
Okay, all right, Mangalam, thanks a lot for that. But back to you, Vinny. Tell us about RVNL.
RVNL is in focus. We're expecting a positive up move today in the stock. They've received an order. 625 crore project is the cost of the order. L1 bidder from the Southern Central Railway. It's an EPC project. This project will be mainly focusing on a doubling of the tracks between certain stations. So keeping an eye on that. A big project win coming in for RVNL.
Okay, all right. Let's see if that excites the stock at all, because yesterday a lot of PSUs were down with the rest of the market. Vinny, thanks for that. Let's quickly head back to Sudarshan. I think there's some news on Bharat Forge as well. We've got the North American Class 8 truck orders data. Sudarshan, how does it look?
So normally for the month of October, historical data suggests that October orders are normally healthy as fleets start building up for the next year and they start ordering it. But for this time, October orders are down 6% month on month, and on YY basis, it's up just 2%. And analysts say October orders fall short of seasonal expectations. And if you just talk about this month, total orders have come in at 28,300 units versus average of last 7 years of 33,940 units. So down almost 15 to 16%. Also, analysts believe some fleets are being cautious as they order new trucks for 2025, and orders in October typically increase slightly from the prior month. So overall, it's minor negative for Bharat Forge for today's trade.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's do a quick recap of all the top stocks that we've covered. Stocks with positive news flow include Eicher, Maruti, as well as RVNL. But we've got a lot of stocks reacting to negative news flow. ABB India, Amara Raja, Sundaram Finance, KEC, Gland Pharma, Bata, and Bharat Forge. Time to slip into that snappy break. Come back. Hemang Jani is waiting for us. He'll help us out with some more fundamental stock talk.
Welcome back. So let's see if the market is going to get any relief and reprieve from yesterday's major slam dunk. The pre-open right now, not the pre-open, the implied open is suggesting that we'll at least have a green tick as we begin. Wait and watch continues. We have our first guest joining in to talk fundamentals, local fundamentals that is on the show. Hemang Jani is with us. Hemang, good to have you on. Hope you had a great Diwali. So I want to actually start with a stock like ABB India, where the read-through or the flow-through hasn't come through in terms of execution. The numbers are okay, but they're not as good as what the market had in mind. How do you look at this space, the industrial space, and some of these stocks like ABB, which have had a good year, a good rally? If there's any weakness today, would you be a buyer or, would you be in the camp that chooses to stay away?
Yeah, good morning, Surbi. Thanks for having me. Yes, this result season, has not been the best that one can really expect. And ABB is no different. And there is a definite miss on the front of revenue per se, because, there is a bit of a longer gestation across transportation, metals, energy, data centers, etc. But the good part about ABB was that the margins have been relatively very strong. And we do think that that was a positive takeaway. Also, what we have to reckon is that many of these stocks have corrected about 15 to 25% in the last about 1 month, ever since we've got into this correction. So we would wait for some more clarity to emerge in terms of the growth on the con call. But definitely, if there is a meaningful correction today, let's say about 3 to 5%. Certainly, it would be an entry point for a stock like ABB, which has been displaying a very good growth, in the last about 12 to 15 months.
Okay, all right. Hi, Hemang. Good morning. Good to see you, Ben. What about the Royal Enfield? What's your view? The numbers look pretty okay. And now they've gone ahead and they've launched the Flying Flea. It looked quite good from a, from a customer's perspective. But from a stock's perspective, what's your view?
So, Nigel, good morning. I think from a product offering perspective, since this is going to be probably the first EV from the Royal Enfield stable, definitely a little bit of excitement. But we have to be mindful that this will be rolled out only next year. And if you see current month itself, the data on the festive sales, Royal Enfield did exceptionally well. However, the stock has corrected, post even this numbers. So from a technical point of view, not because of the new product rollout, but because these numbers have been good, I do think that there is a better risk reward for a technical, let's say about 10-15% kind of an uptick in a stock like iShares.
All right. Hemang, stay with us. I think we have the management of Tilaknagar Industries now joining us, the first management of the program. Stock's done phenomenally well over the last 2-3 years. And of course, the latest round of excitement around Tilaknagar, of course, was, the liquor policy in Andhra Pradesh. Andhra and Telangana are important states for Tilaknagar. We have the management, Amit Dhanukar, CMD at the company, join us. The numbers came out some time back. Amit, good to have you with us here. Good morning. Thanks for joining us. Prashant this side. Let's just get some basic hygiene numbers out of the way. H1 revenues were about 690 crores. Your guidance for the full year is 1,300 crores. H2, as I understand it, usually is much better for liquor sales. Would you want to revise that number upwards for the full year?
So you are Prashant. Good morning and good morning to all the viewers. You are quite correct when you say that H2 is typically better than H1, and that's traditionally been the case for us. So we do expect to be on track with our guidance.
Would you want to up it, Amit? Since
No,
you're already tracking 1,400 crores at this run rate, and you're saying H2 will be much better.
So H2 will be better. I think we are just waiting for, Andhra, one of our key markets, which we have spoken at length before also. They've just gone through a policy change. The route to market has just recently changed. So we're just waiting for things to settle down. And certainly, I think if, we should expect the market has privatized, so we expect good traction over there. and that should help us, be on track.
But Amit, I understand that it's early days because this policy change, I think, came into effect only last month. So I know it's pretty early, but it seems to be a big move, right? Because there are, private vents that will open up, and we know what happened to states like Haryana, etc., when they went down this route in terms of just sheer consumption. So can you give us some projections? How much? What's the average sort of, sales that you've done in Andhra and Telangana earlier? What is the share as a percentage of the overall pie? And what happens? I mean, you're in the industry, you would know when retail goes private, to what extent does consumption go up?
So that's a good question. I think, but first, let me address the first part of the question. Andhra and Telangana both have been traditionally quite strong for our company in terms of our sales and brandy consumption. Approximately 50% of our total revenues come from both these states combined, and I think next 18 to 24 months, we wouldn't really see that changing too much. I think with privatization, I think what will happen is I think industry is quite hopeful that the sales would increase. I think this government also has announced that the number of shops also they will be increasing by 10%. So that should give further impetus to improving distribution in the state, and it's a progressive policy from what we have seen. But keep in mind that when there's a dramatic policy shift of this kind, from government to privatization, initially for a quarter or 2 quarters till things settle down, there could be some momentary blip. But if you look at the next 3 to 5 years, we are quite optimistic in terms of how it will turn out.
Okay, so at least tell us, if this policy change hadn't happened, how much were you expecting Andhra to grow at? 8 to 10%?
Again, yeah, maybe low single digit, and now we would say that it would be double digit.
Double-digit growth from Andhra.
Yes,
all right,
yes, definitely.
Hi, Amit. Good morning. Pretty early in the morning to talk about a drink. But, given that it's festive season, I thought you're going to go ahead and raise your guidance. But you're saying 1,300 crores, so we'll take that. But, a couple of aspects, the way you've evolved the business, just a brandy player or a flandy player. Now, in fact, you're looking at various other pockets. The Samsara Gin investment, that's working out well. From a customer perspective, y'all have gone ahead and increased your stake out there as well. So let's get a couple of numbers out of the way. When I visited your facility a year or so ago, I was, pushing you to say whether or not margins will improve. And you said you're confident from that 13% mark, it'll move up. First half of the year, you've done close to 17%. Is that sustainable?
So, Nigel, I'll just give a slight disclaimer over there. Margins, definitely, the margin profile has improved. 17% margin, which we see is, there's a subsidy amount which we have received from the government of Maharashtra. So, if you adjust for that subsidy amount, then the margins still come, at a healthy 15.5%.
And you can hold it around these levels?
We'll be able to hold it. I think commodity prices have stabilized, so I don't see any challenges on the commodity side this year. So we are quite confident that we'll be able to hold this guidance going forward as well.
Okay, got it. So 15.5% X of the incentives. With the incentives, it could be around that 17%, right?
Correct. Absolutely.
One more question I wanted to ask you. Since you've been trying to move away from brandy, and I've been looking at a couple of other bigger players like Pernod, they have been talking about sticking to premium brands, and that's where they're looking to sell Imperial Blue whiskey. That's an asset that's likely to be in the market, and various Ps and various other companies are interested. Since you're debt-free now and you're mentioning numerous times in your presentation you want to diversify away, could this be an asset you're looking at? It'll be a very large ticket one, but are you all interested?
So, Nigel, I stick to, earlier what we have said, that the company now with, the debt-free position and free cash flows being generated, we will, over a period of time, we will look at moving both geographically and product-wise as well. We have launched Mansion House Whiskey in Assam, which is a foray into whiskey. So, certainly, I think...
Got that, Amit, but are you interested in Imperial Brew? Have you looked at that asset?
So, Nigel, I'll refrain from making any speculative comment right now. I think the only thing which I would like to say is that as a company, we continuously keep evaluating opportunities both organically and inorganically. You have seen we have made Samsara investment. We also recently invested in Bartisans, ready-to-drink cocktail mix. So we remain alive to what opportunities will emerge in the market and actively look at evaluating them.
That is not no, Nigel. I think you would have got a better answer, a straighter answer if you would asked, did you like the Imperial Blue whiskey?
Do you like the Imperial Blue whiskey?
I mean, I wouldn't say it's definitely a great brand. I mean, one of the
it's going to be a big asset if you go for it, because I'm reading a couple of articles which suggest it could be valued at 5,000 crores. But as you said, you could be looking at inorganic growth. You're looking to shift away from brandy as well. So we'll hold you at that one.
Prudent inorganic growth also, Nigel. I must add a disclaimer that.
Got it.
All right. Not getting carried away. So that's good to know. And I think being conservative always helps. Investors appreciate that. Thank you very much for joining in, Amit. That's Tilaknagar Industries early in the morning. It's been a good quarter and they're talking about a better second half. Let's quickly head across to Anuj now. Big day ahead with one major global event unfolding. Anuj, yesterday's selling, I think, caught a lot of people by surprise. Just the extent and the manner of it. What do you make of the market setup now?
Yeah, Surabhi, morning. At that stage of life where nothing surprises me. So, yesterday was that kind of a day. Out of nowhere, the market, collapsed, and intraday we were down 500 points on the Nifty. Look, you can ascribe various reasons. Clearly, there's something that the market knows that we don't, and that actual reason perhaps would come when the market is actually close to the bottom, and that reason perhaps would mark the bottom. Who knows? But as of now, you are ascribing various reasons. FI selling has been the easiest explanation. But we have seen FI selling in the past. In fact, entire rally we have seen FI selling. It's just that this time the selling has been way too aggressive. If you look at the October number, for example, it's been record selling, and November hasn't started on a good note either. Muted earnings season is another reason which is being given for this market fall, and that's true actually. If you look at the top line growth especially, that's been quite muted all through this quarter. The global cues of course have been strong, and we have been falling alone really. Sentiment right now is very weak, and I think no rally is sustaining here. The next stop is the 200-day moving average of 23450 thereabout. On the Nifty, the first support is 23,816, yesterday's low, and then if you break that 23,700, 23,800, the option zone. And on the upside, if you have a rally, 24,150 to 24,200 is the first resistance, and then 24,300 to 24,350. Bank Nifty has been one shade better, and yesterday SBI, out of nowhere, did support quite a bit. Here the first support is 51,000 to 51,150, the 100 exponential moving average, which has been like a solid support for the Bank Nifty even in the October lows, and then 50,200 to 50,400. On the upside, 51,500 to 51,700, and then 51,800 to 52,000. But frankly, this market is no longer about the levels, it's about the sentiment.
Anuj, you're talking about all those reasons, right? I heard one more reason. Although I heard the reason, somebody told me after markets had shut. Yeah. So yesterday, apparently, there is an AMFI circular on market abuse which went into force. It went into force yesterday. Yeah. And apparently what it does is so traders at asset management companies will not be as aggressive they basically trade less. So it was, I spoke to a CIO at a fund and I asked him, well, is it true?
That's good news in this market, frankly.
No, the implication being that FIs are selling, locals are absorbing all of that. But because of the circular, they'll be, less inclined to take advantage of this, sort of price fall. But the CIO told me, well, we're in the business here to take advantage of anything which we find attractive. So circular, these kind of things should not. But at the margin, that was also, I heard this being cited as a technical reason, not a fundamental reason, specifically for yesterday's sharp fall. Anuj, thank you very much for that. Well, we'll take a quick commercial break here. Mitesh and Sudarshan are with us with some technical trading ideas. Stay tuned, that's coming up.
Welcome back. Well, let's get straight to our technical experts. We have Mitesh Chakkar and Sudarshan Sukhani who join us on the show. Good morning, gentlemen. Well, Sudarshan, you go first. Yesterday, we did have a weak trading session, but we did see a bit of a recovery in the final 90 minutes. Do you think that recovery can get extended on the upside, or we go back down and maybe head towards that 200 DMA?
Yeah, good morning. See, yesterday we broke down from a 6-day trading range. I would think that is far more significant. That is why I had said that yesterday we should not trade. We are in the middle of a range and the range can go anywhere. Once we have a breakdown from any kind of support or resistance level, in this case a breakdown from support, then it's best to stay in the direction of the short-term trend. The short-term trend is now down. Now there are two options. I can't comment on that 1 hour recovery. This happens so many times when there's a sharp fall. There's a bounce back, but that may not be sustained. So the traders have two options. One is to sell into a small tepid rally, and the second is to stay away. Because this is a short selling trade, I usually suggest stay away, but traders can take any of the two options. I do not think buying is a good idea.
Okay, so cautious approach. Don't be a compulsive buyer. That is Sudarshan's advice. Got that. Gentlemen, good morning. Mitesh, what about you? I mean, yesterday was a complete knockout, right? Of course, there was a recovery from the lows, but it was just intense selling. I remember us speaking on closing bell because you had some shorts going on in the market. What's the approach for today?
Good morning, Survi. So I think the market has clearly, been declining, and we had some kind of bounce back towards the end of the day yesterday. Also, is that with this kind of fall in the last few weeks, we are slightly oversold. So what we have done is, is to trail the stop losses really tight. 24,050, 60 is my area. If it starts getting past that, once we'll take profits on the short position which are available, and then we'll look for higher levels to possibly reinitiate shorts. And those levels would be 124, 200, 250 zone. And then in case we start getting past that, then we'll go aggressively short around 24,500 levels. So the texture remains weak, but being oversold means that there could be some choppiness and there could be pullback rallies which could happen. Having said that, the bank nifty hasn't been breaking below previous lows. So I think that's where some strength is. So we are avoiding, shorting the financial names or the banking names. In fact, looking at counter longs over there. And that's the approach which we are maintaining. The bank nifty, the level which I'm watching on downside is 50,800 and 50,500. As long as we don't break below these levels, I think the bank nifty could remain sideways and could possibly in that manner aid the nifty. On the stock side as well, I have mix of buy and sell calls. ICICI Bank is a buy with a stop at 1262 for targets of 1310. About is buy with a stop at 29,100 for targets of 30,200. Sell on Grassing with a stop at 2621 for targets of 2515, and DLF is a sell with a stop at 801 for targets of 765.
Okay, all right. Sudarshan, what about you?
Well, I have a mix of trades. I have NMDC where a buying opportunity exists with a stop under 222. And we have all seen how PSU banks have been outperforming. PNB is a buy with a stop under 99. Two intraday shorts, Balrampur Chini, you can consider going short with a stop above 620. And finally, Wipro, another intraday short with a stop above 550.
Okay, all right, gentlemen. Thanks very much for that. We'll come back to you closer to market opening and get some more trading calls going. Right now, I have to slip into a very quick break. We'll come back. Let's see what the pre-opening rates indicate. And the corporate conversations will continue. We'll have Mr. Vimal Kejriwal of KEC International joining in to talk about business trends after the second quarter. Welcome back. I don't want to scare you anything because this is just like, 1 minute into the pre-open, but we have to report what we see on the screen. So right now, again, the indication is that it could be a weak start. Maybe not as bad as this. I mean, let's look at it. In the pre-open, the sensex is down 0.5%. The nifty is looking like it's down 1%. We'll see how this plays out. A couple of stocks will come up for you. Weak names include HDFC Bank, ICICI, Reliance. Remember yesterday, the big boy was under so much of pressure, taking the market down with the TCS. So right now, almost everything seems to be down again on the Nifty screen in the pre-open. Some of the metal stocks are looking better, like JSW and Hindalco. So those are very, very early trends. Let's wait for these rates to settle. We'll come back and revisit them after another 5-7 minutes. In the meantime, let's get another corporate conversation going. KEC International is the next company on our radar. Now, KEC reported a good set of numbers for the second quarter. Revenues are moving higher. The company, however, has flagged off concerns in the railway business with respect to execution. So let's find out more. We have Mr. Vimal Kejriwal, MD and CEO at KEC International joining in. So thanks so much for being with us. So I think overall, I mean, and we're flashing the numbers as you speak. Overall, it was a decent quarter, decent first half. Your revenue in the first half is up about 10%. It's done even better, about 14% in the quarter gone by. But I think the issue is on margins, because for the full year, you've been saying that you want to get to 7.5%. But whether we look at Q2 or the first half, the margin right now is trending a lot lower than that target. So what is the issue? Is it the railway business? Is it something else? If you could just take us through the big picture.
Morning, Surya. Thanks for having me. I think what has happened is we are still maintaining that we should be able to close at 7.5% for the year. And we have also said that at the end of the year, towards, let's say, exit of FY25, we should be anywhere between 9 to 10, which obviously implies that we do expect that the margins in Q2, Q3 would be better and Q4 would be significantly better. Coming to the reason for the margins, if you look at our margins for this quarter, we are at 6.3. Last quarter, with a one-time, we had said 6.5. If you take that one-time off, then EBITDA was 6%. So there has been a growth in the margin quarterly, also year-on-year, as well as quarter-on-quarter. But the issue what we have is that we could have probably done a lot better, both on the growth, because we are guiding for 15% growth for the entire year. And as you rightly said, we are at 10% for the first half. So we do expect a significant ramp up in growth also. However, what has happened in Q2 specifically is if you look at our India T&D business, it's mainly concentrated in Rajasthan and Gujarat. That's where all the renewables are coming. That's where all our orders from Power Grid and all are there. And the monsoon was very, very severe, especially in Gujarat. So there was a considerable, I'll say slowdown in some of our T&D projects, which are obviously at a much higher margin. And secondly, I think the labor shortage, although it has eased out, we were able to hire additionally 4,000 laborers, I'll say technicians in this quarter. We still have some problems going on in the civil side. So these are two reasons why the revenues have come down slightly. It's less than what we were expecting it to grow. Coming to railways, yes, railways has been a pain point. It's recovering now. So I think that's been a little bit of a dampener. But that was on the expected lines. I think the margins have come down mainly more because of the monsoons and the labor shortage, not because of railways.
Mr. Kejriwal, hi, good morning. So you're saying that margins by the end of the year should be between 9 and 10%?
Yeah, Prashant, what we're saying is exit would be around 9 to 10, so which means that effectively FY26 would be between 9 to 10%.
Okay. By FY25, exit should be. So by the first quarter of 26, you should be in that range.
Yeah, it should be in that range. Yes, that's our expectation.
Okay. What about ordering, Mr. Kejriwal, if you can give us a sense? How has ordering been? I mean, I have the numbers here. 13,500 crores year to date. Your total sort of full year FY25 guidance is 25,000 crores. What are you seeing out there in terms of ordering? And can you exceed this the guidance, the 25,000 crore number?
I don't know whether we'll exceed. We have an 8,500 crores of L1 also. So I think reaching 25,000 should not be a major issue. Whether we can exceed or not would depend upon, I'll say T&D is doing well. Out of the 13,500, 70% was T&D. So I think T&D will do well. Civil is where we are seeing, I think as you're aware, private capex is hardly picking up, although we have got a couple of L1s now in private capex. So it would actually depend upon how the civil pans out and whether we'll be able to, go beyond 25. But I think 25, we are pretty comfortable.
Hi, Mr. Kejriwal. Good morning. Just moving away from your operational performance, what about that asset, ITD cementation? The street believed that you were interested. Now that asset has gone away. What happened? Where did the talks get derailed?
No, I think it's a normal transaction where we were, I'll say, amongst other things, we were looking at that also. So I think someone else has taken it. It's as simple as that.
So what about the other asset then? How aggressive are you in terms of bidding for that other asset? Could you help us out with the size of that asset as well? And by when can we hear about it? As you said, there are other assets. So you're interested in a couple of them. By when can we hear something, sir?
I think they are still at a preliminary stage. So I think it's too early. And we are looking at very niche assets to add capabilities in, let's say, in civil or somewhere in international market, etc. So those are under discussion. So I think it will take some time. I think too early.
And you've already raised some money. Will you look to raise more money?
Not at the moment, no. I think we are very clear that at that point of time, Nigel, we had said that we had taken an approval if we get into an inorganic one. And for organic, we are around 100 million, which we have done.
Okay. Mr. Kejriwal, just to press on that earlier point about railway projects and water projects, is there, I mean, are you going to go slow in terms of bidding for work in these two segments? And is it a temporary slowdown you're seeing? What exactly are you seeing, sir, here?
So railways, we have already gone slow. If you look at our revenue numbers, Last year we had done 3,100 crores. This year we expect it to be anywhere around 2,500 crores of revenue. Our order intake last year was only 2,000. This year till now is around 13 or 1,400 crores. So at the moment we are slow. However, what we are now seeing is that government emphasis on infra is in the railway infra is slowly improving, reducing more from the Vande Bharats and more on the infrastructure. In fact, last month they have come out finally with 8 or 10 Kavach tenders also. So if there are items or projects which interest us like, Kavach or signaling, etc., then we would look at it. Hopefully, we should start seeing some improvement in the railway order intake or revenues from next year. I don't see it happening this year because the tenders have just come out, so I don't think they'll get decided. So we are not writing it off. The business will pick up. There's enormous opportunity. We had our own problems as well as the problems with the change in the contractual terms, the counterparty, etc., which I think is getting slowly resolved.
So you're saying that broadly, from a government side, apart from what you went through, the focus was on train sets, these Vande Bharat trains, and not so much on building out the other railway infrastructure, where a company like you would come in. But that focus is coming back.
So what had happened was that when there was so much of emphasis on the trains, we were, sort of not allowed to work on the contracts. You were promised a 7 or 8 hour block on the railway line saying, okay, you'll be allowed to work for 8 hours in a day. And because of the trains part of it, you were allowed only 1 hour a day. Okay. So the projects got delayed and your costs increased, etc. However, now we are seeing a lot more focus coming up saying, because I think everyone has realized that infra needs to be built. So, and also there is a change in our strategy where we have sort of shifted from working on the tracks to, let's say on the Kavach or on the signaling system, etc., which does not entail stoppage of trains. Okay.
Yeah. Okay. Just very quickly, one last point, sir, on this ratings downgrade. CARE, I think, came out with a downgrade on both the long and the short-term debt ratings. And I'm going through their sort of release. They said that higher debt levels, moderate profitability is leading to a deterioration in the debt coverage. Just your thoughts on this, on, what is the debt right now? What are the payouts due? And, would you want to bring down the leverage level? And whether this downgrade, if at all, whether that will have any implications in terms of your funding costs?
No. So, Surabhi, this downgrade happened a couple of months back. And to me, they jumped the gun. We had told them that we are coming out with a QIP. And that's what they mentioned in the rationale also. That once the QIP happens, the numbers will go improve. But anyway, it's their call. Now with the QIP, all the ratios have in any case improved. And as I guided just now, the margins are improving. So whatever impact, and I don't think we had any major impact of the rating downgrade has already been factored in our costs.
Okay, and the debt to equity by end FY25?
Okay. So let me just give, I think we've not discussed that. So what has happened is our debt has come down by 1,100 crores. And if you discount the QIP receipts also, then it's come down by 250 crores year on year. And the interest cost has also come down. Debt to equity is pretty, see, we hardly have any long-term debt. All the debt is virtually working capital. Okay. So that way there's no long-term debt on my balance sheet at all.
Okay. All right, Mr. Kejriwal, we will leave it on that note. Thank you very much. You have a good day and a good second half. Like you're saying, the second half is going to be looking better. Margins will start improving for KEC International. Well, with that, let's quickly go across to our technical experts and see if we have any more ideas from them. Sudarshan and Mitesh are with us. And as I toss it to them, about a 80-point dip. That's what the Nifty in the pre-open is telling us. Sudarshan, your calls?
Well, consider buying PNB with a stop under 99.
PNB. Okay, got it. And Mitesh, your trade?
I'll go with a sell on Grasim for targets of 25, 20, 25, 15.
Mitesh, just a couple of more names if you can weigh in. One is PVR Inox sold off aggressively yesterday. I don't know if you have a trade here. And come in on Hero and Bajaj as well. Both were big losers.
See, PVR was surprising given the fact that there was some positive news flow of movies doing well, but the structure has turned weak with the fall. As long as it doesn't capture 1530 again, good chance that the stock is heading towards 1435, 1430 zones to begin with, and 1400 in the next case. Both Bajaj and Hero, I think, have entered some kind of correction. Hero started obviously earlier than Bajaj. And yesterday, Bajaj hit the 200 average. If it breaks yesterday's low, expect, targets in the range of around 92.50 to maybe even on the downside 9,060. So I think there's still some more downside left. There's no sign of a reversal yet.
Okay, all right. Thank you very much, Mitesh and Sudarshan, for those specific trades which are coming through. Well, let's get you a CNBC-TV18 exclusive now. Oil marketing companies are likely to see compensation on rising LPG under recovery. Sapna has got all the details. She's joining in with the story. Sapna, good morning.
Hello, Prashant. Well, yes, that's right. So if you look at the April-September H1, the LPG under recoveries of the government-owned fuel retailers has gone up over 1,600 odd %. Smaller companies like BPCL, HPCL, I think had an opening LPG under recovery of around 98 crores March 2024 when the financial year ended. BPCL actually had a positive recovery. They had a positive net buffer as far as LPG is concerned. Now, just look at the numbers for both the companies: 4,500 crores in BPCL. Over 4,000 crores is BPCL, and look at the IOC numbers: 1,000 odd crores worth of LPG under recoveries March 2024. April, September, that number has gone to 8,870 crores. So there's a clear case over here for the companies to seek cash compensation from the government. Matter most likely has already been kind of discussed informally within the petroleum ministry, which is the administrative ministry. The matter has to now go to finance. So if you recall, way back in FY22, just post the Russia-Ukraine war that has broken out, around 22,000 crores had been given to the companies at that point in time. They had sought around 28,000 crores in terms of the under-recovery losses to be compensated. So something similar is likely to be followed this financial year also. We have to wait and watch and see how this process stands, because companies seeking compensation at this stage is one thing, the administrative ministry taking cognizance is one thing, and then the finance ministry agreeing on that is one thing. Most likely this will again need a cabinet approval, so there could be a process involved, but this is definitely on the cards.
Photo finish.
Okay, so 80 points down on the pre-open. Let's see how it goes.
We've got the market down 1/3% after yesterday's sharp fall. We got the first rate starting to come through, and 60, 70, 75, so 23,900 around is where the market is opening at. And the bank Nifty starting absolutely flat, actually. A bit of an outperformance in the Nifty bank, 51,160 coming through, but this is still very early. The sensex is starting about 0.18 lower. The mid-cap index is down about 0.25%. It's a 40-point downtick now, the Nifty. So, more of a just holding pattern, sideways kind of session ahead of the big event later today. The heat map on your screen now, more down than up, most definitely. You got about 15, 16 names which are higher, and the rest of the market, of course, starting in the red. So very quickly now, 85 points lower. So that's about 1/3% or so. But let's get to stocks, Surbhi.
Yeah, absolutely. I mean, I was about to say that we'll take this with both hands. It was just about 30-point downtake, but suddenly there's again more selling that's coming through. 80 points down again. Coal India, Reliance, M&M, Trent. These are the weakest stocks on the Nifty right now. The selling on Coal India is quite severe this morning. Okay. I think Nigel's telling us that it's gone X, so we'll keep that in mind. Trent, Reliance, Bharti Airtel, Titan. So these are stocks that are lower, but as you can see, they're not even lower by more than 1%. So it's getting offset. On the metal side, this is very, very interesting. It seems traders want to start building positioning ahead of the China announcements by the end of this week. Remember, there's already chatter about how local governments will have higher debt ceilings so they can go out and spend more. More stimulus expectations from China is getting the metal pack quite excited. There's a Britannia, Nestle on the consumer side that I can see higher. Hero Moto trying to recover from yesterday's losses. Bajaj Auto as well. And then it kind of fizzles out over there. And the Nifty, by the way, is almost turning positive. So this is looking good. The rally is today being squarely led by the metals pack. But Nigel, as I hand it over to you, the stock that we were just discussing before the markets open, look at Tilaknagar Industries go 10%. Now that's some high.
Well, that shows all the way, because the growth has been good, the volumes have been good, and the margins have been better as well. And could there be a possible diversification away from the brandy business? They've already had their hands a little bit into gin, a little bit into rum as well. Could there be another acquisition? Well, time will tell. For the time being, they're debt-free as well. So Tilaknagar Industries is up close to around 10%. Earlier today, Manglam as well had told us about Hatsun Agro. That stock is up close to 9% as we speak. So big up move is what we're seeing out there. Sharda Cropchem, that stock is up close to 8% as well. So it's a good up move is what we're seeing out there. RR Cabell as well did see a little bit of selling post its numbers. But that stock has pulled back very, very nicely. So that one comes up for you on the screen. And let's try to, eye a couple of other names. JK Paper, those numbers were a little bit disappointing. The stock has lost close to around 4% as we speak. A quick word on some of these ferrous-related names. China's National Steel PMI rose by 5.6 points on a month-to-month basis to 54.6 in October. And that's the first time that it's expanded since March 2023. So yes, some of these stocks did see a lot of selling, but maybe part of the reason that the metal companies are pulling back could be because of this. So that's the big one that's up for you on the screen. By the way, big breaking news coming at the bottom of the screen. E2E Networks specializes in a couple of products, and I think L&T will acquire 21% stake in E2E Networks with an investment of around 1,400 crores.
I was saying this, Nigel. E2E, I think, is a company which was mentioned by the NVIDIA India CEO. Stock's done phenomenally well. I think E2E is up, if I remember correctly, some 15 times in the last couple of years. L&T is coming in as a investor in that company. We should actually try the company, E2E, and of course L&T as well. And that's an interesting diversification, if there was, right? I'm an infrastructure company.
Public cloud services,
public cloud, yeah. They work with NVIDIA, and and it was the a few listed companies and the IT services companies. I mean, if you saw the NVIDIA presentation when Mr. Jensen was here in Mumbai, there were lots of companies in that backdrop behind him when we was making this speech. E2E was one of them, but it was the only company which got mentioned by the NVIDIA India CEO. I think it also, by the way, is a company which has got investments by some Bollywood film stars. No, I'm serious. So that is, we'll have the rate up on E2E as well, but that is news which is coming up. I'll come back to this.
The rationale, because I was trying to look at what the companies, what L&T is saying to the exchanges. L&T's rationale is the acquisition is complementary for market approach in the fast-growing areas of AI and cloud services. Along with this acquisition, the company, that's L&T, also proposes to enter into a software license agreement and co-location agreement with E2E Networks. So yeah, maybe, I mean, L&T is all about infrastructure, and these days, I think beyond physical infrastructure, digital infrastructure is the present and the future.
And I think 21% stake for 1,400 crores, if I read that correctly. Roughly, if you look at the valuation out there, it should be in the vicinity of 5 times. That will be around 7,000 crores, I think, so approximately 7,500 crores approximately. If you go mathematically, the current market capitalization is around 8,100 crores. The stock is the listed one in the NSE. Well, it's more or less flattish as we speak. So, we'll try to get in further details. As Prashant said, it's already rallied big time, but interesting development.
Absolutely. July 2023 stock, which is a year and a half ago, right? Stock was 170 rupees, and it's now trading at about 4,800. So that is the kind of move that it has seen. Well, I'll just take 2 seconds more and just look at the market. By the way, the Nifty has come back into the green, right? We were down about 85 points, and we've swung back into the green as we speak. So 24,000 is where Nifty is now trading at. So that's a very good recovery coming through. Raymond is up. Raymond was a big swing. I mean, Raymond low yesterday was 1325, and it closed yesterday at almost 1,700 rupees. So that's a 400 rupee swing on Raymond yesterday. And today it's it's a 3% mover with decent sized volumes as well. We've got Chennai Petro, which is up about 4%. It's had a one-way fall recently. What else? Patanjali is up about 2.5%. There is RR Kabel, which is up 6%. That's the wire and cable company. So closed at 1,500 rupees yesterday, 1,600 plus this morning. Oil India is up about 2.5%. That's an exploration name. Oil's up 3% last night. Taj GVK has been coming up. From the highs of 400 plus, that was back in May of this year, to the recent low of about 200, under 300. It's trying to come back up, back about 300 now. the Aditya Birla AMC business is up about 3.5%. The stock's up 3.5%. EPAC Durables, I mean, it's 3 circuits in a row. 3 days back, closed at about 400. Stock's at about 470 right now. That's a 5% move coming through. Market breadth is very positive. And you got about 1,600 stocks higher and about 600 stocks which are starting in the red. So in favor of sort of winners is what you're seeing this morning. Gokul Lauria is the CEO of Asia and co-head of global equities at Morgan Stanley. He's joining us now to take some questions. Gokul, great to have you with us here. Thank you very much for your time. Appreciate it. Gokul, the big question I wanted to sort of begin this conversation with is this FII selling. And in a way, it's kind of different because it's not some broad emerging market sell-off. It's more India specific. So just wanted your thoughts. What is the big dominating driver, Gokul, as you see it, behind this FPI sell-off that we've seen?
Good morning, and thank you for having me on the show. Look, I'm not that concerned about it. When FIIs make investing decisions, they make relative decisions for the most part. People have been incredibly positive India for a long period of time, and when there are developments in other markets, they take some chips off the table in one and they put them in the other. So we obviously had excitement in China end of September, early October. There's a possibility that that continues. So it's just going to be a little bit of rebalancing, not much more than that. None of the investors I've spoken with are of the view that longer term, the attractiveness of the story changes meaningfully. There'll be cyclicality from time to time, but my view, certainly over the long term, is that this is going to be one way in terms of flows. The other thing I'd add, though, is, and this is unique to India in many ways, is that there's a domestic pool of capital, as you guys know, that's growing every month, that lends an element of stability to this market. So FII flows matter, very important for any market, any country. But to have the good fortune of having, domestic capital plus international capital, which a lot of markets don't have, is pretty unique.
Gokul, hi, great to have you on the show, on the program. I guess, it's that time when we have too many cues and too many events to digest and go over. But your thoughts on how India has been placed amidst all of this. And the Indian market has been falling, I think, ahead of others, a little more than others, through this whole period of foreign investor selling in October. How do you see India, which was touted as one of the best performing markets, most resilient, great growth? But suddenly a lot of that narrative is coming under question in the last 4 to 5 weeks.
So, Surabhi, it's partly because of what I said. I mean, it's, when you're making an investing decision, a market like China, for instance, which people have been sort of chronically underweight for the longest period of time, all of a sudden there's chatter around the stimulus, there's big monetary and potential big fiscal in the offing. You need to rebalance. So that's been one part of the story. I think the other part of the story is, and this doesn't worry us, but there has been a slowdown in India. You could attribute it to a slowdown in government spending. You could attribute it to cyclicality around festivals. You could attribute it to monsoons and excessive rains. But that macro slowdown has translated into some impact on earnings. And India, certainly from a valuation perspective, some would argue is rich. And to the extent that these slowdowns happen, it's quite natural to see the underperformance that we've seen over a period of 1 month. But again, I go back to I wouldn't be too concerned about the performance in October because structurally the story, and we've written about it extensively, structurally the story remains really, really positive.
That's good to hear, Gokul, and thanks a lot for joining in here on CNBC-TV18. This is Nigel on this side. Well, the near-term trigger is the US presidential election as well as what the Fed does next. What are you penciling in from the US presidential election? Who's better from an India market perspective, Trump or Harris? And do you believe that 2 more rate cuts are due for the remainder of this year?
Yeah, your second question is a lot easier than your first one. I think the the rate cut story, we certainly have a view that there will be 2 more between now and the end of the year. Inflation's moderating. There's no question about that. The data suggests that. And growth is slowing, but certainly remains pretty healthy. So from a Fed perspective, our assessment is that there's going to be 2 cuts this year, the potential for 4 more cuts between early 2025 and the fall of 2025. So a neutral rate of somewhere in the range of 3.25%. So that I think is on track. And as the Fed has said many a time, they're going to be data dependent, but the data that we see right now, both from an economic perspective and an inflation perspective, supports that. The election is, you see the same polls we see. I think it's tight. It's very difficult to call. From an India perspective, or frankly from a global economics perspective, I think the most significant issue to keep an eye on is the tariff framework. And if the tariff framework is excessively penal, I think it certainly has an impact on India, but I think it has an impact on global economic growth and potentially inflation as well. So to me, that's the key variable. Outside of that, frankly, I don't really see much impact.
That's one part of it, Gokul, tariffs, and definitely, we need to see what is that framework, irrespective of who takes the White House. But what about taxes? Because we know that Ms. Harris has been talking about the need for corporate America to pay more. And if that were to come through, will it trigger any sort of profit taking, or will it create a speed bump for the market? Because till now, the market's been absolutely unfazed on this tax issue.
Yeah, potentially, but those issues are one time, and there might be a valuation adjustment sort of reflecting that. But look, one of the reasons that the U.S. market has done so well is because the economy has actually done really well. We've had consistent 2.5–3% growth, inflation coming down, corporate earnings have been super strong. We think earnings are going to be up just shy of 10% this year, between 12 and 14% next year. So the markets, I think, are going to be driven much more by the economic cycle, which will translate into an earnings cycle. To me, the biggest risk for U.S. markets is actually not the election. The election might create some dispersion in the market, and the election might create a one-time sporadic move. But the biggest risk is a slowdown in the economy that is greater than what is currently anticipated, which results in a slowdown in earnings. We spoke about India, but the U.S. market's trading at a 22 times multiple as well. A 22 times multiple implies certain earnings growth, and if that earnings growth doesn't materialize, I think there's downside. So I would stick much more to our knitting as it relates to the economy and earnings, as opposed to a big election overlay.
Gokul, we've been in this, we're sort of coming off such a euphoric phase, right, which has lasted so long, uninterrupted for the last 3–4 years. And typically when you come off these long phases, it's difficult to imagine anything else but continuation of what we've seen, right? But do you think so in that sense, there is perhaps a risk that you are, one should prepare for slower earnings growth going forward, not just 25, which most likely we will see downgrades too, and maybe even beyond, unless we see help from the monetary side in terms of rate cuts, and maybe a consumption boost as well at some point.
In the U.S., I think we're going to get that. In the U.S., I think we're going to, certainly from a monetary side, I think we're going to get, as we spoke about, I think we're going to get somewhere between 4 and 6 cuts in the foreseeable future, which would certainly be a
Gokul, my
positive.
question,
My question was about quantitative tightening.
Yeah, my question was about India. Sorry.
Yeah, look, India. Again, it's funny that the parallels are actually pretty high, which is, India is pricing in certainly the markets are pricing in a strong macro and strong earnings. And to the extent that that does not materialize, I think there is downside. But look, just given what we're seeing from a government investing perspective, which obviously has an absolute impact, but what's much more interesting is that it has a multiplier effect in that it stimulates both private investment and foreign investment. I mean, one of the reasons I'm here today is we're actually inaugurating a new building where we're actually housing approximately 8,000 people. And this is one of our global centers. We have two, one in Mumbai, one in Bangalore. The reason I bring this up is we're putting much more investment into India because the infrastructure now is world-class. And the experience we had during COVID gave us the confidence of doing that. So we're investing in infrastructure. And this is Morgan Stanley. You could extrapolate this across a whole range of different enterprises. But the thematic, actually, the underlying thematic is actually the same. So if you have state investment in infrastructure, you've got private investment, you've got foreign investment, that's going to translate into a level of growth that I think is actually going to be pretty attractive. And then you have the possibility of urban and rural consumption coming together, which hasn't really happened so far. So there's that to look forward to. So my view is that, look, structurally, the story is a positive one. It's never a straight line. There'll be periods of time, like October, for instance, and frankly, perhaps this quarter from an economic perspective, that growth slows. But we don't have excesses in this economy. You look at your fiscal deficit, your current account deficit, the levels of leverage, interest rates, inflation, etc. Yes, there's room for rates to come down a little bit, but I don't think that that's necessarily going to be the driver. I think the driver is going to be, just the potential rate of growth over here, which if you think about the backdrop, is probably more positive than we're seeing almost any other place in an economy of scale.
That is a nice optimistic note to end on. It has a good ring to it. Gokul, thank you very much for joining in, and we hope to sort of connect with you more often. Thank you for all the perspective on the local situation here, as well as, of course, the global market setup. Well, with that, just a quick look back at the market. What we are seeing right now is actually a very flat trend. I mean, the market's not done too much, and it's trying to stay in the green territory, which is interesting. Just to talk about some of the movers and shakers, let's take a look at where the green is. Metals is one trend that we highlighted, and the other trend is the recovery in auto stocks after the absolute drubbing yesterday. Today, the likes of Bajaj Auto, Eicher, Hero, Maruti, a lot of them are seeing a bit of a pullback, 0.5% to 1%, depending on which stock you are seeing. There's some buying on consumer as well, by the way. Tata Consumer, Titan. Some of the discretionary consumer plays, they are also looking better today. So discretionary consumption, auto, which is actually part of discretionary consumption, and metals for sure. The three green themes for the morning right now. Let's quickly move on. I think we will take stock of a couple of movers in the market. ABB obviously reacting to numbers. The performance was good, but not good enough for the market. It was missing the count on several parameters. Amakshi is here with a recap. Amakshi?
Well, absolutely. ABB is tanking in trade on the back of a weak set of numbers. When we look at the order inflow came in at 3,342 crores. This is slightly lower than what the street was working with, and in fact is slightly lower than the 3,500 crore run rate that we've seen over the last 2 quarters. In fact, when we look at the order backlog, on the other hand, that was at a record high. It saw an uptick of almost 7%, and this is mainly because the order book has tilted toward the long cycle orders. This in turn has impacted the revenues, and that is because the period between order booking and revenue recognition now seems a bit stretched on account of higher share of long cycle orders. So revenue has grown at a slower pace of 5%. It has missed street expectations by almost 11%. The EBITDA margin too has come in nearly 53 basis points higher as compared to what the street was anticipating, and this outperformance is largely being driven by the growth that we see in the gross margins. They've expanded by over 670 basis points, and that is mainly on account of a 6% dip as far as the cost of materials is concerned. EBITDA has come in 8% below pole. Net profit at 440 crores has come in nearly 8% below street expectations. So overall, doesn't seem like a good set of numbers from ABB India. The stock is reacting to the same. The con call is scheduled at 10 a.m. So we will be waiting for the committee that comes through the management.
All right, thank you very much for that. Bata, we want to focus on once again. Mangalam is here. Mangalam.
Well, brokerages aren't particularly happy with the results that Bata has reported this time around, just a 2.2% sort of revenue growth that the company has reported. We have Goldman Sachs note which has come in. They have a sell rating target price of 1,300. They had expected a 3% revenue growth. The company disappointed on that as well. And there was only a slight improvement in trend from the first quarter, which was a negative 1.4% growth itself. Retail expansion at 10% was similar to the first quarter. Adjusted net profit declined by about 30%, also missed their expectations. Citi, on the other hand, says that while revenue growth was muted, at current levels, the stock is trading at 47 times 1 year forward and 40 times 2 year forward earnings. So as a result of which they find it expensive. They have a sell call with a target price of 1,000 on the stock as well.
Okay, all right. Mangalam got that. So Bata not quite in step in terms of the performance delivered in the second quarter. Let's take a break right now. We'll come back with more on the other side. Lots of other management calls also lined up. Amit Agrawal of DCM Shriram will join in and we'll talk about their second quarter performance. Welcome back. The next company, as I said, on our radar is DCM Shriram. The company came out with a good set of numbers for the second quarter. They have multiple businesses, obviously. There is the chlorovinyl business, there's a sugar business, there's a fertilizer business. So it's got lots of verticals. Overall, if you look at the performance, the revenue was up about 9.2%. The operating profit margin actually expanded. The margins touched over 6%. And the profitability was also sharply higher. So let's figure out how the trends are shaping up. We have Amit Agrawal, Executive Director and Group CFO at DCM Shriram with us. Amit, good to have you on. So I actually just want to start with the chlorovinyl business, which has done really well this quarter, right? The revenue is up 12% and the EBIT is also sharply higher. Just tell us how you see the second half trends play out for this business. And also, our colleague points out, apparently there is an anti-dumping duty on PVC suspension resin that's going to be levied. So that should be great news, right? Because I think you, along with a couple of other players from the industry, were arguing for this, for some protection against all the cheap imports coming from China and other countries.
Yeah, true. So on your first question, the trends on profitability, we do expect these trends to continue in the second half of the year as well, because largely these trends are supported by a better cost structure, given that the energy prices over the same period last year have come off, and we expect these to continue, and also that we have done some energy saving initiatives. Investments also we've done over the last 1 to 2 years, which are shaping up pretty well. So these trends will continue. On top of that, we have these new investments which are now coming on track with the new chemicals like hydrogen peroxide, aluminum chloride, as well as ECH. Now, once these are up and running, we do expect performance to get better in the coming
So if you could give some numbers, that would help. I mean, I'm looking at the breakup. The revenue for the chlorovinyl segment is about 770 crores right now. And then you're talking about a lot of this capex also coming on stream. Yeah. By the end of this year, how big will this business be? And in terms of contribution, will it remain below the sugar business? Because right now the sugar business is the biggest one for you, right?
Yeah. So for this year, yes, the profitability for chemicals will remain below the sugar business. However, in the next year, which is, when we'll have the full year for these new capexes, new products which have come up, then we'll see a better year for chlorovinyl.
Okay. And what about this anti-dumping duty, PVC suspension resin? I believe it's already come in effect, or
no,
it's not. Okay.
It hasn't. It is only a recommendation from the Ministry of Commerce, which has gone to Ministry of Finance. And then it takes about anywhere between 1 to 2 months for it to formalize, depending on the view that the Ministry of Finance takes. So
and what will be the implications if you get a favorable sort of a view from MOF, and if they indeed decide to levy the duty, the anti-dumping duty, then what would the implications be for your business in terms of revenue, pricing?
Yeah. So see, most of the PVC that comes into India, the prices that become suboptimal is because of dumping from China. Now, on China, if I remember correctly, the range of dumping duty is anywhere between $80 to $125. Ballpark, let's say about $100. So that should be the likely impact on the prices, product prices.
Okay. Just to complete this picture, and then of course we move on to the sugar business as well. I think caustic volumes were up about 15.5%. You mentioned the aluminum chloride projects as well, some of the newer capex that's coming in. On the individual chemical side, if you could just give us some projections that we can work with.
See, it's difficult to give the numbers for this year, right? Given that these projects are coming up, especially the hydrogen peroxide and epichlorohydrin. These projects, aluminum chloride is a project which will come up in probably it'll take next 1.5 years to come up. So I think on hydrogen peroxide and epichlorohydrin, one of the projects has already been commissioned. The other project will get commissioned in Q4. So as I mentioned, we will see full year numbers in next year. And my sense is the capacity utilization also will take about 2 to 3 years to ramp up. So yeah, I think good times for the chemicals business going forward.
Okay, so now let's talk big picture. Also sugar, I think sugar this quarter there was an EBIT loss. Yesterday we were speaking with ISMA and they were saying that I think in Maharashtra there's a bit of a go slow in the activity because it's election season. But now give us projections in terms of full year revenue. How much will the chemicals business be? What will be the growth over, say, FY24 for the chemicals business and also sugar?
See, in sugar business, as you mentioned, Q2 was a loss. So that is, more of a seasonality in that business. So if you see most of the sugar companies' results that you see this quarter will be a loss. And that's more of a seasonality and the accounting issue. But I think next quarter and the quarter after is when the crushing starts, and that's when the profits also are the highest for the sugar business. So my sense is profits for sugar business should be in line with what we had last year. However, the chemicals business should see about 10 to 15% higher profitability.
10 to 15% higher profitability. Okay, final question. And now full year projections for the company. And we really try and understand this because you have so many different business lines. Now, for FY25, because FY24, your revenues dipped at an aggregate level, right? I mean, they came down to just under 11,000 crores. FY25, what will be the top line growth and blended margins, all the businesses put together at the operational level, EBITDA level? What is the blended margin profile that you're hoping to achieve? Two big numbers.
So, yes, we do have multiple businesses, right? But I think we've always mentioned that the businesses that make a difference are essentially 4 businesses. One is the chemicals business, the sugar business, farm solutions, and Fenesta. So one really, if you have to see, and 2 of these businesses, farm solutions, Fenesta, are the consumer-facing businesses. So one really has to look at our company from 4 business perspective. Yes, other businesses do support overall, profitability. But these are the 4 drivers of our performance. Now, coming to the point you raised of what do we see FY25 numbers, I think it's a little difficult to give you what the numbers will look like because the kind of businesses we are in. But we do expect growth in chemicals, in farm solutions, and in Fenesta business.
All right, we'll leave it there. Thank you very much for joining us. And great perspective across lines of businesses, and there are many as far as DCM Shriram is concerned. Thank you very much indeed. Well, the market, I think, is absolutely flat, and as we were saying, this is okay. It was flat, now it's down about 50 points, but that's still, under 0.25% or so. Not really giving very much by way of a directional cue, more of a holding pattern going into the US elections later today. The IPO market, of course, the primary market has been very interesting as well. And the variety of companies and new kind of business models which are coming in the listed space has exploded over the years. And today we have one such company coming to the market. The IPO of Sagility India has hit the primary market. The company aims to raise 2,106 crores via an offer for sale of 70.2 crore shares. We have Ramesh Gopalan, MD and Group CEO. And SD Srinivasan, Group Chief Financial Officer at Sagility India, now joining us. Now, Sagility, of course, it works with in the US healthcare ecosystem. It works with both payers, which are insurance companies in the US, also with providers like, hospitals, for example, and it straddles that space. Gentlemen, thank you very much for being here. Mr. Gopalan, before I get to the business and the business model and what you'd be able to do in terms of revenues, etc., going forward. This is purely a PE-owned company, and this is, the offering is largely an offer for sale. So what should we expect? Should we expect, the PE player to continually sell down over a period of time as the fund life comes to a close? I mean, just give us a sense there, Mr. Gopalan. Go on.
Yeah. Good morning. First of all, thanks for having us on the show. Yes, Sagility is about 3 years old. We were the healthcare division of Hinduja Global until 2021. And so we were bought over, the healthcare division was bought over by EQT, which is a PE player, like you mentioned, right? So the offer for sale today is just about 15%. And so the PE player will still be the majority owner for the foreseeable future. And the fund has a very long life. It's a long life fund. So the fund, there's no pressure to sell down from a fund life point of view. And so EQT is likely to be our majority shareholder for the foreseeable future as well.
Gopalan, you'll have to come down to 75%, right? So that'll have to be done.
Yes, we have time for that, right? So we will beat the 75% norm, but we still have a long time to go for that.
So beyond this OFS, if you can give us broad, when is the next sort of share sale likely to come, in your opinion, to the best of your knowledge?
Yeah, listen, I mean, there's no firm decision made on that yet. Like you said, we need to meet the 75% norm, and we will do that within the required timeline. But beyond that, at this point in time, we are focused on the 15%. And as you also know, we did a pre-IPO sale. So there's another 2.61% that were sold to investors before the IPO.
Okay, all right. Hi, Mr. Gopalan and Mr. Srinivasan. Welcome to the show and welcome to the stock markets. Let's get a couple of other details out of the way. The last 15, if I look at the 15-month period, you'll have grown by around 10 to around 12%. Should that be the steady state growth that we should be working with? And also, since we have your first quarter's numbers, there has been some margin compression. Why is that?
Okay, first on the long-term growth, you're right. We've been growing in double digits for the last few years, and we are reasonably confident of maintaining that growth trajectory into the future as well. And margins fluctuate a bit quarter on quarter, but if you look at our long-term profitability, we've maintained pretty steady EBITDA margins between 23 and 25% over the last several years.
Okay.
So the margins that we have shown, or the reported numbers, are at 17.8%, and it has got a significant portion of provision that was made for share appreciation rights. The nature of these share appreciation rights that were given to the senior leadership team had moved from cash settled to equity settled. So though this passes through the P&L, this is not going to be a liability or a cash expense for the company. This will be directly settled by our holding company, Sagility BV.
Which it means that margins should sustain in that 23 to 25%, which you'll have done in the past.
Yes.
Yeah, it is sustaining at 23 to 25% as we did in the past. And it is an adjustment that needs to be made because these are not cash expenses for the company.
Got it. All right. Since this is a pure OFS, we need to understand a couple of other details. Is there any outstanding loan from the promoter entity?
Yeah, there is an outstanding loan of about $110 million as we speak. Okay. It is an external commercial borrowing at 8% coupon rate pushed in by the parent company to us as part of the leveraged buyout. So this will get cleared off in the next 2.5 years. So that is a structured repayment pattern given in the RHP as well.
Okay. It's a foreign borrowing, which will be sort of paid off over the next couple of years. The growth rate, I don't know if you addressed this, has been between 10 and 12% over the last 15 months or so. Is this what we should expect, Mr. Gopalan? I mean, the rate of growth in this range?
Listen, obviously we're trying to grow faster. But if you look not just 15 months, but even a few quarters before that, I would say somewhere dollar rate somewhere between 11 and 13 and rupee rate of growth somewhere between 12 and 14% is the average that we've achieved. And we are reasonably confident of those kinds of numbers going forward as well.
Okay. there is an outstanding litigation against your subsidiary by Synergy Global, Mr. Gopalan. Could you address that? Is that a risk for investors, and what kind?
No, so this was an outstanding litigation right at the time of carve-out, and this is a carved-out liability, and we have a bank guarantee from the seller against this liability. So there is unlikely to be any liability against the company because, like I said, we have carved that out and also have a bank guarantee from the seller.
So the Hindujas have provided a bank guarantee for this.
Exactly.
Okay. What is the amount? What's the size of this? I mean, if potentially it were to come to a head.
Srini, that's 45 million, right, Srini?
Yeah, it's about 45 million. Beyond the bank guarantee, we also have an indemnification clause in the contract where the Hindujas would indemnify or make good whatever losses that we incur as a company.
And where is this litigation Where is this going on? Which jurisdiction?
In the state of Illinois and Texas, there are two cases, and one I believe is being quashed as we speak. The other one is still there.
Okay, all right. Very quickly, the next big tracker that, equity markets in the globe will be looking at is the US election. Do you see the US election outcome affecting the direction of your business? US healthcare is an important debate in the United States right now. So how do you see that impact business?
Listen, while we are 3 years old as a company, we've been in this business for 24 years, right? So we started the business in 2000. So we've seen multiple election cycles. We've seen cycles where healthcare was even more an important topic in the elections. And we've seen various administrations, and through all of it, our businesses continue to grow. So we are not really concerned about the outcome of the elections. As a business, we don't rely on visas for delivering our work. All of our employees in each of the markets are local hires. And so we don't see a big impact because of the outcome of the elections.
Got it. Okay, all right, gentlemen. Thanks a lot for joining in. You've given us a fair idea about business on listing. We'll push you a little bit for guidance going ahead. But for the time being, we know how your business is evolving. Thanks a lot for joining.
Thank you. Thank you very much.
Well, let's focus on the markets yet again. We moved into the green, but now we're down close to around 40 points. And today, the breadth of the market is pretty much even, Steven. So that's good to see, because yesterday, at one point of time, we had only 300 stocks that were advancing. Let's hope it stays somewhere in this vicinity. Midesh Thakkar is back with us. Midesh, what do you make of the first half an hour to 45 minutes?
So, Nigel, we attempted a pullback, didn't work out because 24,050 wasn't crossed. My sense is that I think, there could be a pullback because the oversold reading still persists on the indicator charts, and this time, we'll trail the stop to about the same levels, 24,050. We'll keep recommending people that were short, trail your stop loss to those levels. But a couple of stocks have broken down in the meanwhile, so I have a sell on BHEL. BHEL is a sell with a stop at about 239 for targets of 220. And EVs, after a long time, showing signs of profit booking and some kind of negative setup patterns evolving on the charts. So sell here with a stop at about 58.50, or maybe just 5 points above that, 58.55, and look for a target of around 56.40, 56.35 on the downside.
One more question on Voltas. That one's looking quite good. It's pulled back from the lows that we saw last week. There's an MSCI rebalance element as well, I understand, on this one. Yeah. Where is this one headed?
So, Nigel, it's at the weekly support area. The levels of around 1620 is where the weekly averages kind of come in, 1620 to about 1650. There are two averages converging. And I think this could give a bounce back, possibly to about levels of 1730. And in a good case scenario, even 1775 weekly on the upside.
By the way, the one very clear trend in the market is PSU selling today. It's not just BHEL. BHEL is one stock that, of course, Mitesh was talking about. Look at everything else also. NBCC, NHPC, IRFC. A lot of these stocks are down. IRCTC, of course, came out with really, poor numbers. So there's that added reasoning over there. But in general, PSUs are quite weak in today's session. NHPC is also down about 2% right now. The only PSU pocket which is not weak is actually PSU metal stocks. PSU metal stocks, or even private sector metal stocks. Metals is a very strong side of the market. Look at, for instance, NMDC or even SAIL I saw. Yeah, SAIL is also up about 2%. So the larger metal theme is intact. Mitesh, finally, since metals are having a great run, short-term trade, 1-2 days, or even just intraday today, any more names you'd go with?
The one stock, which is come on my radar is JSW Steel. It's doing a choppy correction between about 976 to about 940. And now I think it's on the verge of breaking on the upside. So, days high is about 976.9. So let's keep a trigger at about 978. Buy about that, keep a stop at 960. Then this throwback could possibly even head towards 1015.20 on the upside.
Got it. All right. Thanks a lot for that, Mitesh. Well, let's head to our next management, APL Apollo Tubes. One of those big outperformers, if you look at it in the last 10 years or so. Unfortunately, the last 1 to 2 years hasn't been so great from a stock price perspective as well as a business perspective. The last quarter was a weak one, but what's the way ahead? Mr. Deepak Goel, the Director and Group CFO of the company, joins us on the show. Hi, Mr. Goel. Good morning. Thanks a lot for joining us here on CNBC-TV18. Now, the question is, have things recovered? Infra as a percentage of your total mix is roughly around 25%. The first half of the year, spending was impacted. Are you seeing signs that there is spending coming in from the government on ground? Point number one. And also, just to tie in with that, what is the volume growth you are working with for this year itself?
Yeah, it's the ground reality is there, sir. In the first half, it's impacted by the general elections and monsoon seasons. In second half, we are seeing the demand is upcoming and restocking level is again, we are seeing at the channel partners levels. So in the second half, we are expecting 10% growth quarter on quarters. First half is impacted due to some regions and our margins are also impacted due to the steep downfall in the HRC prices. So in the second half will be the better.
So for the year, then what should the growth look like? Last year you did around 2.6 million tons. For this year you landed what? 3.2, 3.3?
3.2, 3.3 we are expecting, sir.
For this year. And on that base, if demand's going to come back, what kind of a growth can you look at FY26?
Around 25% growth we are looking, sir. So FY26 we are targeting 4 million tons and for FY27 we are targeting 5 million tons, sir.
Let's not go as far as FY27, but for the time being, at least we'll hold you at this 3.2, 3.3 as well as 4 million tons. The other aspect, which drives the stock is the EBITDA per ton. And that's come down, but you all have mentioned a couple of reasons. One is inventory loss, second is discounts. So could you tell us what is the outlook? Should we expect some inventory loss even in Q3 or that's done? Point number one.
No,
and I was still pushing through any discounts because volumes look good in the past quarter. The problem was on the EBITDA per ton. Go ahead, sir.
Yes, sir. So inventory loss is not in the Q3. We are expecting now the HRC prices are stable and in the increasing trend. So we are expecting no inventory loss is the further. And secondly, sales discounts are giving to capture the market shares that will be theirs but if our volumes increase, our efficiency is increased, our operational cost is reduced by some amount. So we are targeting EBITDA margins in the normal range of 4,000 to 5,000 rupees in the upcoming quarters.
In the second half of the year itself, you'll see 4,000 to 5,000 rupees?
Second half of the year.
One factor with regard to this, grabbing the market share, which you have done, you all have relatively done pretty okay and volumes are speaking for itself. But when you're going to, pull some market share, in the general part of the business, which some of your competitors are there, that difference between Patra as well as, primary and secondary steel, that has narrowed. So that's where you all will gain market share. But could it be margin dilutive or do you believe give and take everything, still you'll do 4,000 to 5,000 rupees?
Yeah, our operational margins still, it's are okay, sir. It's in the range of 4,000 to 5,000 rupees per tons. If gap between the Patra and HRC pipe is narrow, so we gain the market share, sir. And our operational efficiency is also increased. That's why our fixed cost is reduced, our semi-variable cost is decreased. And our margins will improve if our volumes are increased, sir, in the stable market scenario. Only is the one factor is the HRC prices. It's very good for us. In the last quarters, HRC prices are reduced by 7,500. It's very good for us, sir. Because of this, we gain the market shares. We increase our efficiencies. we increase our volumes, and for the long terms, our working capital is reduced. So all the factors, it's very good for us, sir.
I think for you all, the best case scenario is the HRC prices are more or less constant as well, instead of fluctuating too much. Now that they've come down and they've narrowed the gap with Patra, I think that will be the best case scenario. We'll have to see how that goes. Suddenly, there is some murmur that it could be some duty that will come on imported, imported steel. So we'll have to keep an eye out on that front. Now, besides the operational performance, I want to ask you a couple of other factors, Mr. Goel. The promoter entity stake has come down. Now it's sub 30%. And from a stock market perspective, the promoter is normally the best analyst, right, on his own stock. Do you think the promoter entity would want to increase stake? Actually, it's come down over the last few years from around this 28.5%. Is there any inclination? And worse still, do they want to sell some more stake, or they're happy now at around this 28% mark? We'll get the chart up for you on the screen.
They are happy at the 8% level. In further, no reductions will be there, sir. If they have the funds, they definitely increase the their holdings, sir.
Okay. As of now, it is 28.32%, and you're saying they don't want to sell stakes, so we got that. What about their investment in Shankara building? That business as well is going to go through a corporate action with regard to splitting the business. They have some stake. Is there an intention to either book out of this stake that they have, or add some stakes since that stock price as well has come down?
No, it's a strategic investment, sir. So Shankara building is our largest distributors and doing the best performance in the couple of years, sir. When we have invested in the Shankara, their volume is around 10,000 per month. Now it's reached at the 35,000 per month. So very good volume growth from the Shankara we are seeing, sir. And it's a good paymasters, and they are gaining market shares. So we are not seeing any up and down in the Shankara, sir. See, we keep the investment intact.
Okay, all right. Very quickly, you have a small debt in the books of 300 crores. Part of that could be inventory. Part of that could be because of the capex that you all have undertaken as you all go towards that 5 million ton mark. By when will you become debt free yet again?
In next 1 or 2 quarters, sir. It's a very small. It's a working capital only.
Yeah.
So we can see the net cash in the next quarter or next to next quarter.
Okay, but if you're so confident about business and you're going to be debt free, why don't you do a buyback? Some of your shareholders are wondering what happened to that glorious story. The stock price went up, and after that, it's not done anything. Do you think you could do some buyback or something?
Our management agenda is first we finish out the total outstanding liability, then we will think about the buyback, sir.
Okay, so is that a possibility that you do a buyback?
First, we finish out the total outstanding liability, then we will think about it.
We'll try to push you on that. Mr. Goel, thanks a lot for joining in and giving us all those details here on CNBC-TV18. You're guiding for better times. First half of the year has been a weak one, so we'll track you to all of these numbers. Well, for the time being, we'll slip into a short break. On the other side, we'll focus on the commodity segment. Manisha Gupta is waiting for us.
Welcome back. So the equity market has had a sort of quiet morning, and bulls will probably take that, considering we're not seeing any kind of a massive fall like yesterday. Let's see what is now happening in commodities. We have Manisha joining in. Manisha, I'm sure everyone's only talking about one thing, which is this grand US election. But what are the moves like today?
Well, commodities are faring better than other asset classes, while the gold and silver prices are kind of steady. But we have seen strong gains come in for the industrial commodities. So most of the metal prices are trading firm, but it clearly has been about the crude oil prices with overnight gains of 3%, which makes it the best performer in this week until now. Well, there are 3 or 4 things which have been supportive for crude. One, OPEC and allies plan to delay planned output hike of 130,000 barrels per day by first 1 month. So that will only start now in the month of January. The second thing is about reports of Iran now looking to plan attacks on Israel through proxy militia. I mean, those are the kind of reports that we've seen come in for the last couple of days, and that premium is coming back in prices. The third thing is about the tropical storm, a newer one forming in Caribbean yet again. This was yesterday's news, and as we go ahead in this week, we'll understand on how, what category, what intensity it takes over. But this has always been a case, and we have seen the last 2 storms actually shut down nearly 15 to 20% of Gulf of Mexico oil facilities, and for some few days, and that has impacted supplies there. And of course, the fourth biggest thing is the US presidential elections. Now, when you look at the Republicans, well, they have been talking about Trump, that is talking about clearing barriers for energy production, opening up shale gas, opening up various areas where the oil production was stopped or halted. So that is one thing the markets will look at. The other is Harris, which has constantly emphasized on greenhouse gas emission controls, also talked about incentivizing green energies. So it is two different things, and who comes is what the crude oil prices will be reacting to. But at this point in time, we are taking positive cues coming in from this one. The markets also are looking at the US crude production, which in the month of August hit all-time highs, and we have seen markets hold those kind of numbers. So even as OPEC is not increasing production, the non-OPEC is looking at increasing production. We also have increased production coming in from Iran, Libya. There also is a very interesting statement from Total Energy suggesting that the global oil demand will peak around 2030 going forward. It is all going to be about the presidential elections, as we've been saying. The US Fed meeting is going to be the second important thing. And the Chinese meeting is already underway from 4th to 8th of November. We haven't seen any strong concrete statements come in yet, but that usually comes in around 7th and 8th. And the markets this time around will also focus and take in on what the US Fed does. So that's going to be an important event to watch out for.
Oh, absolutely. It's nervous anticipation considering the magnitude of these global events that we're talking about. Thank you so much for the updates there, Manisha. We do have to take a quick break. On the other side, in our special segment, It's the Economy, Lata today will be in conversation with Kumar Rajgopalan of the Retailers Association of India, as well as A.K. Tyagi of Haldiram, to talk about how festive consumer trends have played out.